Sarvana sir, I'm sorry, just 2 minutes. Ladies first, so I'm giving few minutes for Mrs. Bhave with your kind permission. Be on the line, right?
Yeah,
Because
yeah.
yours will be a cream and topping. So Mrs. Bhave, please.
Thank you. Good afternoon to everybody. I'm supposed to speak on
Sound.
IFRS 9 and the challenges which the banking industry face because of IFRS 9. IFRS 9 is going to be a game changer for the banking industry, especially so far as the classification of financial instruments is concerned. Due to the changed
Sound,
model of
please.
classification and measurement of financial instruments, a number of instruments which can be classified and measured under amortized cost will get limited because of the cash flow characteristics test and the business model test. And as a result of it, IFRS 9 is the privilege of having amortized cost classification will be limited to a great extent. In addition to this, the banking industry is going to face some major challenges in the case of impairment of financial assets. During the last quarter, we have seen the clearing of the audience tables of whole banking industry because of the Herculean effect of the effort of the Reserve Bank of India governor. It is a precursor to the application of IFRS 9, which is likely to come from 2018, becoming applicable. This is so far we have been taking the impairment of financial assets, especially in the banking industry, depending upon the NPA norms which have been prescribed by the Reserve Bank of India. IFRS so far required IS 39 required the provision of the impairment loss on the basis of the incurred loss model. However, there is a major tectonic shift in this because now we will be going for the expected loss method, wherein the assessment of impairment will be on the basis of a substantial increase in credit risk from the original recognition of the financial instrument. If there is no significant increase in the credit risk of any financial instrument, still the loss for 12 months has to be provided by the banks and rather anybody who is using a financial instrument. If there is a significant increase in the credit risk, then the lifetime losses have to be provided for, which will impact to a great extent the profit and loss accounts of especially the banking companies as well as the statement of assets on the statement of financial position. The banks will have to go through carefully about how the impairment losses have to be calculated and what is the methodology that has to be followed. So in the coming years, we will see a lot of cleaning of the books. So far as banks are concerned, there will be a lot of system changes that will happen, and I hope that this will in a way clean up the books, especially of the banks and the financial institutions. Thank you very much. Over to you.
Yeah, Sarvana sir, I request you to come live now. Thank you for keeping the patience.
Thank you, Mr. Ram Bhaveji. I am working as a Chief Investment Officer at LIC Nomura Mutual Fund. Along with me, my colleague and our mutual fund's Chief Financial Officer, Mr. Bhavan Dageti, also here with me. And before that, I would like to thank Mr. Bhave for providing opportunity to LIC Nomura Mutual Fund to discuss about IFRS for the participants. We understood the participants are mainly the chartered accountants and students of CAs and MBA students and other financial community. Coming to the mutual fund industry where we are working, this mutual fund industry today, it is dominated by around 42 mutual fund in the country. Way back in 1980s, it was this mutual fund industry is, was run only by Unit Trust of India, which was formed in 1964 by the Parliament Act. Then after that, the government of India permitted the PSU banks to float the mutual fund industry. So then SBI mutual fund, LIC Nomura, LIC mutual fund, and Indian Bank mutual fund, everybody came into the picture. Now the industry has grown for last 30 years, near about 13.4 lakh crores kind of asset under management. And earlier, this mutual fund industry, if you look at, it was the investors profiles more on the metros and mini metros, maybe maximum 10 to 12 cities in all over India. Today it is penetrated to more than 800 towns, and even more than 1000 B15, that is beyond 15 kind of places all over India. Today the entire Indian mutual fund industry asset under management, as I told you, around 13 lakh 40,000 crores. Out of that, the equity AUM asset under management will be around 4 lakh crores. And balance all are in balanced fund as well as even the debt schemes, and some are in cash funds. So the mutual fund culture is penetrating in India, and we are expecting this industry will grow more than 12-13% going forward year on year. And the culture is penetrating it. Coming to our mutual fund industry, our mutual fund, LIC Nomura mutual fund, where Mr. Ram Mohan Bhave sir is the independent director and our trustee board, and his contribution to our mutual fund, to run our asset management company is humongous. As a being a chief investment officer, I really salute him for his valuable guidance and input and other accounting standards, and even the some of the valuable input what he gives for the funds management, as even for the accounting methodology and everything is really great. We salute him for that. Our mutual fund LIC Nomura, earlier it was Nomura Japan had a stake. Now it is the stake is transferred to the domestic institutions like LIC Housing Finance, JAC Housing Finance, and Corporation Bank. On our mutual fund today, we have around close to around 15,000 crores of asset under management, including the PMS and other SUS 89 kind of various schemes. And our mutual fund is run by the professionals today. People come from various MNC mutual fund as well as even the private sector mutual fund. We run the company today, and the fund performance as well as even the operation standard, marketing, and even the investors education, investor servicing is on par with any multinational mutual fund or even the private sector mutual fund. And coming to the IFRS and impact on mutual fund industry, I leave the floor to my colleague, who's an expert in this IFRS and accounting standard. He is Mr. Pavan, Baghetti. He is our Chief Financial Officer. I leave the floor to Mr. Pavan Baghetti to address the audience, august audience of who are watching now. Thank you.
Hello everyone, good afternoon. Welcome to the seminar or webinar which is organized by Mr. Bhave. I am thankful to Mr. Bhave for organizing this webinar, whereby we from a mutual fund industry, we can explain to all the audience and participants to understand how IFRS is going to impact the mutual fund industry, Indian mutual fund industry. I take the opportunity to run through our corporate presentation which we have made. We have already shared with you. Yeah, if you run through the presentation, running through the presentation, I'll first take care of how IFRS is going to be applicable to the Indian economy, Indian corporates and the mutual fund players as well. As per the Rule 4 of Companies Indian Accounting Standard, they have phased out a roadmap for the applicability of IFRS to various companies. So in the presentation, you can look at in phase 1, companies having net worth more than 500 crore and holding subsidiary, joint venture and associate companies of such companies having net worth more than 500 crore. IFRS will be applicable with effect from 1st April 2016. There will be a second phase which will start from 1st April 2017, whereby the applicability will be extended to companies, listed entities having net worth which is more than 500 crore. The other companies, including unlisted entities, having net worth more than 250 crore. All the holdings, subsidiaries, joint venture and associate companies of such companies will be also covered by the applicability of IFRS with effect from 1st April 2017. The company's Indian accounting standard rules have excluded, or the applicability of IFRS is not extended to few of the companies in different sectors, which is insurance companies, banking companies and NBFCs. If we talk about a mutual fund perspective, mutual fund basically have a regulatory governance through SEBI mutual fund regulations, circulars and notifications issued by SEBI. They are also governed by MFI regulated body. MFI regulates the mutual fund industry through notifications, circulars and guidelines. Apart from that, since it is a company which is incorporated under Companies Act 2013, the provisions of Companies Act 2013 are also applicable. If we discuss on the relevant impact of IFRS to mutual fund industry is impacted on account of IFRS implementation only in two areas. One is the investment valuation and second is a related income of investments and the revenue recognition. So I'll run past you through the how it is going to impact our investment of the mutual fund. If you understand the Indian GAAP, I'll first run you through how is the accounting regulated in current scenario and how it will be after the IFRS implementation. I'll first run you through the impact on investment and then we'll take it further. The investment is currently classified as in two categories. One is current, which is investment maturing in less than 12 months period are classified as current, and second is long term. In terms of the valuation, current investments are at present measured at lower of cost or fair value, whereas long term investments are measured at cost reduced by provision for diminution in value, which is permanent in nature. Apart from that, loans and receivables are always measured at cost in current Indian GAAP scenario. The situation will change in IFRS implementation stage. Post implementation of IFRS, the financial instruments, or you can say investments, will be classified into four categories instead of two categories. Four categories which are stated in the IFRS is held to maturity, fair value reported in profit and loss, loans and receivable, and available for sale. The measurement or the valuation of these financial instruments is termed in two categories. Held to maturity and loans and receivables are stated at amortized cost. That means a cost which is reduced by the amortized value, if any. Whereas FVPL, that is fair value reported in profit and loss and available for sale, are measured at fair value. Now I'll take you through how IFRS is going to impact mutual fund as an entity and an asset management company as an entity. As per Indian GAAP, all the accounting policies of mutual fund is governed by SEBI. The M2M losses are accounted in revenue account and M2M gain is accounted directly in reserves. Whereas in IFRS, everything will be accounted as FEPL and account for change in FEPL in profit and loss account. From an asset management company perspective, since investment will be classified in current and long term, in post IFRS it will be classified in FEPL, AFS, HTM and LNR. The valuation will be done at cost or market value, whichever is lower, and FEPL and AFS will be recognized at a fair value. If you look at the setup of how mutual fund is, mutual fund consists of three entities. One is mutual fund, second is trust or a trustee company, third is asset management company. From a mutual fund perspective, since everything is regulated by, the accounting is also regulated by SEBI and MV guidelines, change of IFRS from Indian GAAP is not going to have a significant impact, or rather I will put it that there will be no impact on the mutual fund balance sheet and profit and loss account. Whereas asset management company and trustee company are governed by Companies Act 2013, so there will be an impact on IFRS to the extent of investment and revenue recognition to some extent. The impact is not significant, but yes, in terms of disclosure requirement and the valuation, the impact will be visible in the mutual fund entities as well. Yep. I'll thank you again to all the audience and participants for listening to us on understanding the impact of IFRS on mutual fund. I'll take it. I'll hand over the floor to Mr. Ram Mohan Bhave to take it forward for IFRS. I'll thank you again to It's over to you, sir. I'll take it. I'll hand over the floor to Mr. Ram Mohan Bhave to take it forward for IFRS.
Having said this on banking and mutual funds, thanks to Sarvada Kumar sir from LIC Nomura and Anjali Bhave, thanks as usual daily.